Hey, I hope everybody's doing very, very well during these troubling times. I hope everybody's staying safe. Before anything, I want to thank you guys again for, always supporting me, and all of you guys been sending me messages like, where are you, and all of that. So for that, I'm very thankful. And I just want to share a couple things with you guys. Main thing being that I've had a troubling last 2 weeks. As you guys can see, um, over here, my count is at 8,500 when we were actually above 13, almost 14K. So it's definitely been a week or past 2 weeks. So what I wanted to do is, while at the same time I go over and analyze my own trades as to why I'm down, I wanted to share that with you guys at the same time to make sure that, others are able to learn from this. And it did take me a while to actually understand as to why was I losing so consistently, and at the same time, why did I lose so much? And I do have a couple of reasons why, and I'll try to explain it as soon as possible. So let's just hop right into it. I'm gonna make sure that we are exactly on the same page here. So the blue lines here represent where and what time exactly I bought in. That's going to be right here, okay? And of course, again, um, all my positions and profits are going to be posted on Instagram, okay? So the blue represents Amazon, and the purple will represent Tesla, and I will go over Tesla here in a little bit, okay? So this is on slash ES. This is basically what I'm looking at when I trade. I trade based on the movement of this and the movement of whoever has the most strength. What I mean by this is, okay, if let's say slash ES is selling off, is Amazon holding or even going up, meaning that buyers would, in this case, be stronger to the point that where these two candles were to come in, for example, it would indicate a stronger move up on Amazon. Now, keeping that in mind, here we go. So my idea for this trade, this was my first trade of the day, which was Amazon. I decided to get in. My idea was to get in above 2380. And as you guys know, my confirmation is usually to wait for a candle to move upwards above the critical level I am looking at. So here I'm going to highlight 2380. Above the critical level that I'm looking at, close on the 1 minute candle, and then keep moving upwards. So with that in mind, I waited until this move happened, and then for this candle to open and show the same momentum upwards. And when I saw that the candle opened right here and then it started to make a move up, I took the initiative to be able to ride this all the way to 2390. That was my first idea. Again, usually in my trades, I move in intervals of $10 with the stocks Amazon and Tesla. And while I was going through this, I said, okay, I'm able to hold through this. Why? Because it could be a retracement. The retracement being the previous area where it last broke, which is 2374. Now, of course, first problem here was not taking profits where profits need to be taken and not taking losses where losses need to be taken. I did hold through this, and you can actually see where I sold. I held from this point right here, this candle right here at 641, and I sold right here at 746. So at the end of the day, my goal was achieved, but due to the fact that I bought right here and I went over this movement, which basically destroyed my premium. So at this point, my greed was so high that I said, nah, after this push, buyers seem very much in control. I don't think I'm gonna, I don't think I'm gonna sell. I'm gonna hold to nearly 2400. That was my second game plan, to go all the way to 2400. Now, of course, for that to happen, You have to be able to see volume. And of course, as you can see, when it was starting to approach 2390, it went towards 2390, pushed down. That should have been my first alarm. Pushed down, retraced to the previous area it broke right here. Didn't close over it. I said, okay, all good. Came back up. To me, that was a I mean, my brain was trying to figure out, I don't know if this has happened to you guys, but your brain, at least in my case, my brain tries to find every way to back up my argument and try to convince myself with whatever factors I can find in order to actually be able to turn out profitable. So, greed. Greed is very important. When you have a game plan, just try to follow it. You know, like this was my game plan, a movement from 2380 all the way to 2390. If this was my game plan from the beginning, this is what I should have followed. And of course, if you were able to sell up here, great. But at this point, I was up like $100, I believe, on a contract that cost me $6,000. And that to me was kind of breaking, like my buying powers was going to be out. And then again, we're talking about 13K I had in this account at this point. So after realizing that I was going to have to hold through something else, I said, okay. I looked at the 5-minute chart. I looked for the possibility of retracements, which in this case would be right here, for it to keep going and keep making move forward. Then I said, okay, I'm gonna hold. That's fine. It moved down, and what did I do? I didn't do anything. I couldn't pull the trigger. Here's the next thing that I did wrong here. I wasn't accepting when I was wrong. I was being negligent, not just with myself, but with all of the time it took me to get to that point. So again, greed and being negligent is so important. You want to take care of bad habits as soon as possible. And unfortunately, for people like me, it takes these types of experiences for you to actually get rid of those habits. I'm not saying that I'm greed free or negligence free or anything like that. It just says that I am now constantly reminded of myself that if I have a game plan, I follow it. And that's the third thing with Amazon, at least in this play. I had a plan. I didn't follow my plan. Okay. And I don't want any of this to happen to you guys. Obviously, if you guys have a plan for whatever trade you guys are taking on, make sure you follow it, because most of the time you're going to be right. And if you just hold through something like this, assuming that, oh, the stock is just going to blow up, yeah, it's Amazon, whatever, or Tesla, or whatever stock you're looking at, don't think that that happens all the time. Okay. Now, on to the second trade I took this same day. So at this point with Amazon, I was down $1,235. Okay. Now, this is my entry and this is my exit. And for Amazon, I was going for calls. Excuse me for not saying that before. On Tesla, I was going for puts. Here is my initial understanding of what I once thought was going to be my play. Now, I noticed first thing, pre-market had a problem, or not a problem, I would say it had a support right around 700. It broke 700 and went down to 790. Okay, I saw this, said, cool. Okay. Of course, this was right after I had lost that money on Amazon. And when I had already lost that money, you get these types of feelings of revenge trading. You want to trade on to be able to get back what you just lost. So I went as far as to actually purchase two contracts. Two, in order to be able to make back what I made, what I lost, you know, when I usually just trade one. And here is what happened. So, first thing I noticed, and my first problem as well, assuming the first broken critical level was going to be the same way after it would retest. So, what happened? First critical level breaks, comes back up, breaks with volume, okay, and goes towards 690. Again, $10 intervals. Comes up, breaks again, okay? This breaks again, but then look at the volume on this. No comparison whatsoever on when it broke versus when it's right here. What was I thinking at this moment? Well, I wasn't even looking at volume. That's my first problem right here. One, not looking at volume, and two, not looking at directions. You can actually see this is a trade on Tesla on slash ES. I always compare. So the market at this point was pushing up. How was I expecting Tesla to make a move down, a strong move down, when the market was pushing up and it was clearly working for them? You know, so my first exit option, if I got in right here, right here at the bottom, should be 700. And if I wanted to be super like, I'd say greedy at this point, would be at least 701, which is the previous area it broke right here. From 701 right there should have been where I called the game, but I held, and once again, thanks to greed, here I am down here. I believe I was up also $60 or something like that. And greed took me over, saying, oh my God, it just crossed. It's going to go to 690 again. No problem. I just got a green trade. Cool. So I said, all right. So I was waiting for this market to go down also. What happened? Well, came up with what? With volume. As you can see, volume starts moving up. Stock starts moving up. This volume represents the buyer pressure. And as soon as this started to happen, I noticed that, okay, broke 700, but it broke with volume. Lowered itself, came back down to 700. I said, okay, good sign. Could have been a retracement, all good. Then, oh wait, this candle came out of nowhere at a surprise. I said, okay, I'm gonna relax. Nope, next candle scared me out. How much was I down? $708. What I'm trying to say with these trades, it's very important. Volume is crucial to any movement. And if the volume is not there, if you are taking profits, if your profit is right here, boom, take it out. And I've had trouble with this. I've wanted my plans to be right all the time so much that it's become a problem for me. And this is a problem I have to overcome once more if I want to get back to where I was and over that. Okay. And one more thing, I noticed that this was a symmetrical triangle pattern. Of course, not at the moment of the trade. As you can see, from here to here, it makes sense as to why this would be the movement. Not as to why it broke above, because it could have broken below at the same time. But the area where this could have been a good trade, like a high probability trade, would be above any of these two necklines. Because when you're trading a symmetrical triangle pattern, you want to trade, if you want your trade to be like secure, you want to trade anywhere above the necklines of these patterns, which would be this for calls, and anywhere below 690 for puts. Okay, so this would have been a much better trade if I would have just been patient, waited for volume to kick in, and at the same time taken out my greed and taken out my feelings of resentment towards the loss that I had taken this day. So I hope that this brief explanation helped you at least understand the different types of, measures that you can take as a trader. I know that my journey has been up and down. It's not always easy, and I have other losses that are going to come up. I'm going to make videos on them just like this. I'm going to try to make them as short as possible. So um, that's basically it. And these were my trade ideas for this specific day, for which, of course, they could have been a lot better. And when you're trading a symmetrical triangle pattern, the first idea or the first thing that you notice is that it makes higher lows every time it peaks out, and higher, sorry, lower highs and higher lows. So you can actually see first high, first low. These are called your necklines. So after it crosses any of these two areas with volume, you can then decide to take a trade on whichever area it decided to break. As you can see, it was obviously on the upper side. Then second area where you should actually be considering the difference in possibilities that can happen. Of course, this neckline is still here, for which it could have gone like this, right? Could have just made like a little teacup pattern coming in like this and then making a U shape, any of that style, something like this would also have probably given this result, for which 720 would have been perfect. And you can actually see how 720 is a critical level. And yeah, that's basically it. And it's things you got to learn from. I've had to go over a lot of my fundamentals as a trader in order to get myself up. And here I am once again, you know, back down, but not giving up at all. So making higher lows, making lower highs until it decides to break any of these two areas. Obviously, it broke this one. Then your next stop would be to break this one. And then your most important would be to break this one with some volume. And then boom, you have a perfectly good trade on whichever side you decide to take. So without taking that into consideration, obviously it was going to be a red day for me. So I hope, you know, everybody is having an amazing week trading these past 2 weeks. I apologize that I haven't been posting, but I really wanted to take the time to learn as to why I'm failing at this point. And I'm going to be doing all of the trading breakdowns for my losses, since I believe that those are the best teachers, not just for me, but maybe for others as well. So thank you again for watching. And if you have any questions, let me know.